Hey everyone, happy Thursday, July 20th. It's about 11:30 on the West Coast, and it's time for another market update. After last week, we had a nice little rally going, heading into Friday, last Thursday when we talked. Friday, Fed Chair Waller came out and, kind of squashed things a little bit, saying, again, they still want to do two hikes the rest of the week. But, we were hopeful. We didn't give up too much ground. We're hopeful heading into this week, we can keep that rally going and see if we can get rates even lower than, they came down to last week. First thing we got this week was some builder news. The National Association of Home Builders, their housing market index, so how they feel about the markets, came in at 56, so slightly up. Anything above 50 is considered expansion for them. So home builders are feeling good about themselves. In a lot of markets, there's not a lot of existing inventory at all, which we'll get into. And so home builders, new homes are basically people's only option. So they're seeing a lot of activity, which they love. The next thing we got, which take a little closer look at, is housing starts. Housing starts, permits, and completions. And the one I want to take the closest look at is permits, because we consider permits kind of future inventory. It's the first thing that's going to be done before people start to build. And this includes both multifamily and single family, just so you know. So 1.44, across the country, about 100,000 homes slash, rentals or whatever, multifamily, age out every year. So we have, that 1.4 million number, let's make it at 1.3 as far as what we kind of expect, annually next year, future supply. And then the next side of that is demand. We have supply side. What's the demand? So the demand is household formation. So how many households are being formed across the country, people moving out, creating new households. That is being tracked annually at about 1.5 million. So if inventory is at 1.3 million annually and of household formations at 1.5, that means supply is lagging behind demand. That's not good for, a first-time home buyer. That is good for current homeowners, because if there's going to be a lack of inventory still going forward across the country, annually, then that's, going to be propping up prices for current homeowners, because there's not a lot of options for people. The next thing we got was June existing home sales. They're down 3.3%, down almost 19% year over year. Like we talked about, there's not a lot of inventory. That remained at a little bit over 1 million units. That's unchanged month over month. That's down on almost 14% year over year. That's only about 3.1 to 3 month supply. A normal market's about 4.6 month supply, and that is also including that number is also including houses under contract. So they're not technically available. Most of those are going to probably close, so they're not really available. So it's even lower if we take those out. Days on market remained at 18, and that's been on a downward trend from 29 to 22 to 18, and then continued at 18. And then 76% of homes sold in less than 30 days. That's up from 74%. So what that tells you is if you're looking to sell your home, or if you're a realtor looking to sell a home, if you price it right, it seems to be going very fast. First-time home buyers ticked down a little bit. Cash buyers ticked up a little bit. And then investors jumped up from 15% to 18%. So investors, people that take their, looking at the financial side of things, they see, at least looks like they see an opportunity in this market right now and are jumping in. Next thing we got was initial job claims. This was really not the most, only important news we got this week. But as far as the Fed and inflation and jobs and all that goes, this is really the only thing we got. Initial job claims were expected to be at 242,000, and they came at 228,000. So lower than expected. Again, that seems good to me on the surface, but the way the Fed's looking at it is that, the stronger the job market is, the more they can keep hiking, basically. And these numbers, again, like we've talked about, this is a lot of secondary jobs, a lot of people re-entering the workforce, a lot of people not able to find full-time work. They're filling these jobs. But like we said, the most important thing is the Fed's looking at this, and they're the ones making the decision. So we kind of have to grin and bear it. So as you can see, these have gone down. They were starting to tick up in the last few months or a few weeks. They've started to tick down. One thing to point out, California seeming to be going up. California, I saw someone pointed out that California's unemployment rate is up to 4.5%. We've kind of targeted that 4.5%. A lot of people believe that when the national level gets there, which I believe we're at 3.7 right now, or 3.6, when the national level gets there, that we would maybe that's when the Fed backs off of their hikes. So if California oftentimes is a leading indicator for the rest of the country for different things, and so maybe if California unemployment with the tech layoffs and things along those lines, going up to 4.5%, maybe that's an indication that the national level is heading that direction as well. Next thing we got was purchase apps down 1% last week, down 21% year over year. Still with rates high and not a lot of inventory, not good for activity in the mortgage industry. Miscellaneous, so we had used cars, like we talked about, it's important on the inflation front. the real-time stuff, the stuff in the used car industry, that continued to show for the first part of July, those numbers are going down. So we know the inflation reports are still showing it going up. So we can expect, just like shelter costs, we can expect some positive gains there in the future on these inflation reports. And then global inflation, a couple days ago, the UK and a couple other countries came out with their reports. UK was down 1%, which is great to see. We live in a global economy. They were a little bit behind us when they started doing their hikes and all that. But, like I said, global economy, so their inflation going down was, had some positive effects on our bonds and things like that. So where does that leave us? Last week we left off at 6.87. We had dropped from 7.22 to 6.87. Some nice gains, but we're up to 7% as of today. And, really it hung out about 6.9% all week. And then today we jumped from 6.9 to 7 on that unemployment number coming in lower than expected. And all eyes are coming up on next Wednesday. The Fed is going to do their next hike. And they're going to hike. It's at, the market should say 99.8% chance they're going to hike. So I guess there's a 0.2% chance they don't, but they're going to hike. And like I said, our goal now is to turn our eyes to the next hike, the next meeting, that they stop then. We got to hope that data starts coming in our favor there. And that's, like I said, they're going to do that one hike on the 26th. A couple days later, we got inflation data coming out. We expect that to be favorable, not, blowout favorable, but pretty good. And then jobs report, and then more inflation in getting into August. So, we got to keep our eyes on the prize. Like I said, not a good week as far as that, those unemployment numbers today, but overall it's great to see for, like I said, current homeowners. If you're a current homeowner seeing, prices going to stay elevated, all the appreciation things all the data we're seeing home prices go up. That's great to see. And one thing I wanted to bring up, one thing you got to keep in mind as far as cash out refis, even with rates being higher, you got to think about your blended rate. So with interest rates going higher on credit cards, with interest rates higher on cars right now, even if your mortgage is going to go up, quite a bit, because you have a 3% rate now and you're going to take like a 7%. If you're paying off your car payment, you're paying off some credit cards, and your overall blended rate or your overall, monthly payment actually comes down, even with your mortgage payment going up, then that's a good deal to worth it. So if you're in that position, or if you know someone that might be in that position, have them reach out, and I'd be more than happy to chat. So, everybody, hang in there. Let's hope, things get better. Let's hope things get better, and everybody stay cool. We're in the middle of a crazy heat wave across the West Coast. So everybody stay cool. Have a great week, everybody.